Let's look at a very interesting Forex pair. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. Brazilian real slash the euro. 8% here from the 52-week low and also 8% away from the highs. We start here with the chart with weekly data points. So the Brazilian real versus the euro, it's been on a downtrend for a pretty long time. But you see that back here we formed a rounding bottom. You could argue that we are forming a potential cup and handle pattern. But that's a very long-term, though, multi-year pattern. What we do see here is that this green 50-week moving average, it's been a big deal as support. But it's also a resistance level. So let me draw that in. You see here as an example. And we are currently approaching that moving average. When we go to the dailies, then we have the big one. The famous 200-day moving average. It's a really, really big deal. And we are really facing a clear surgical resistance 3 days in a row. We go up there and test without making progress. Back here, clear rejection, regroup, then the breakout. So it's a level where we have a tendency to see that if the bulls do not succeed, they usually have a bit of a regroup, which means that the Brazilian real could weaken against the euro. Yeah, temporarily. Looking at the weekly data points here, RSI and PPO, we are not overbought though. So there's no signal here that is really favorable to the bears. But in this case, on the daily data points, if you look back here, let's go to November, it's here. Then we did have a very similar RSI level. And you also see that back here, if we zoom in, this RSI level was a bit lower, frankly, than where we are now. And it also became a level where we saw the bulls go back and regroup a bit, and the bears making some temporary profits. So let's go into my notes. 200 DMA resistance. I think I will give, I think I will give the bears a -7. But that -7 is of course contingent on the 200 daily moving average resistance holding. If we were to break out, obviously, then the extent to which it is a resistance level would of course weaken, because breakout is a sign of strength from the bulls. But yeah, the current setup is bearish. Next, we will look at the seasonality, and that severely corroborates a pullback. You do see to the left. Usually, we do have weakness into later May. Looking at the table view to the right, April, usually it's a red month. May is not really a roaring green month either. So this is favorable to the bears. So in this case, yeah, I think I actually will give a -7 here on seasonality as well. This is just pretty good though for the bears out there. And if I were a bull and looking at this seasonality, I would really consider maybe looking at some other pair. You know, if I was like long the Brazilian real against the euro, it's like it might be time to take some profits. I do use that separate tool for fundamental analysis when it comes to Forex, but because of licensing issues, it's risky to show that tool. But in this case, yes, there are signs that the Brazilian real versus the euro, it is at least to an extent overbought, overvalued. So -3 here in favor of the bears on the fundamentals. Okay, relative performance. Long-term weekly data points, 6% positive correlation with S&P 500, -12% with EWZ. Let me just double check that I picked the right one. Yes, it is the Brazil stock market ETF. So I would expect there to maybe be some different correlations, but yeah. Yeah, anyway, yeah, it's a negative, -13% with gold. Looking at the daily data points, minus 59% of the S&P 500, but then on the dailies, all of a sudden we have 81% positive with the Brazil stock market ETF, which is the type of correlations one would expect between the currency and the stock market. Minus 73 with gold. So let's have a bit of a look here at EWSAT, because if at least short term the correlation was so strong that what is good for EWSAT can be good for the currency, and of course the vice versa. So we have seen a rally here from the Brazilian stock market. A very messy chart though. This is a situation where you want to buy low and sell high. It's very frustrating. It's just so volatile. Up, down, 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 all over the place. So definitively, if you want to trade this stock market, you must use stops. On the dailies, we have a breakout above the 200 daily moving average, which is bullish. But on Friday, this candlestick just really explored the lower regions. We did close higher, but it's this it's a very interesting candlestick to say the least. This is so this is definitively one to have on our radar. Seasonality is not bullish though. At least to the left, to the right here, April. So recently, April, it's been really bearish in 2022, but so far this month, 7% gain. There's been bigger gains for April, so April can be a pretty good month. May, though, as you can see, it's recently been bullish, but there's been protracted periods where May was really, really bad, so... Yeah, the seasonality here and the relative performance data, it's quite something. So let's just compare these against each other there, like this, and this EWSAT. So this measures whether you should be in the currency itself or the stock market. Weekly data points. Yeah, we do see that being in the currency since May of 2021, it's been better to be in the currency than in the stock market. Looking at the daily data points. We have pulled back to an interesting level here for the currency. On RSI, it's a support level where there's been tendency for it to be more profitable to move from the stock market into the currency, basically into cash. Now let's look at the seasonality. Yeah, could be more weakness into later April. Looking at the table view, April is not that good for the currency. May recently, it's been actually not that good either. But May had a protracted period between 2010 and 2018 where the currency substantially outperformed the stock market. Okay, so, relative performance, what should we do here? A lot of noise here. I think I'll give it a tiny bit here to the bulls with a 1. I mean, this was just a lot noisy. We end up with -4 in favor of the bears overall. 200, the daily moving average resistance is the key level. So yeah, there's more reasons at this point to be bearish on the Brazilian real than bullish. The long-term pattern we found, the potential cup and handle is bullish, but that was very long-term, and throughout, those kinds of patterns developing, yeah, you could have a lot of pullbacks. Okay, while we are on the topic of South America, let's look at Chipotle. Mexican Grill. CMG is the ticker. Strong rally here, a bit of a breakout in development, which is bullish, of course, but it's not necessarily like a great time to enter a new position. Yeah, so let's look a bit here at RSI. Yeah, I mean, it's not like... Well, it's risky, but not like super dangerous yet on RSI, but this is good if you have a current, position which you bought, lower. Not good to buy at these levels. Looking at The seasonality could actually be a bit weakness here into May. Table bill view. We do see that April overall, looking at the sum, it's a pretty decent month though. But it's a very mixed month, sometimes green, sometimes red. Looking at fundamentals, price book is not extreme, but it's not low either. Price to sales, it is at a level where we have seen previous pullbacks. PE is still low. Okay, so let's look here at the fundamentals. Well, the price targets, forecasts. 30 analysts with a 1-year price target. Average target is 5% above us. So what would that mean? 5%. If we do measure it, is it like I don't think it's no, it's not a new all-time high at all. So yeah. Okay, so yeah, it's a nice rally here from Chipotle Mexican Grill, but yeah, I mean it's yeah, as I said, it's good if you currently have a position, but I don't have any like good memories of buying breakouts. It's one of the first things you might get into when you start trading is to buy breakouts, because it seems like a truism, right? If a stock is breaking out, it's bullish. No, it's actually bullish for the people who bought earlier. You know, they have profits. If you buy a breakout in your account, the trade starts at 0, literally at 0. Those who bought like here, they have an account saying 25% gain, actually more than that. For them to get a full all-time high, it would be 41%. But if you see this chart and you're like, oh, I'm going to buy the breakout, you start at 0. It could go down 12%. You might get approaching a 12% rally, but you would get a 12% rally for a new all-time high, while those who bought lower could potentially even get let's say here 62ish%. So that is why it's all about buy low and sell high. It's a huge deal. It's one of those things you hear early when you get into trading, but it's so important. I mean, the math just works out. Let's take a random stock here, Hillenbrand. I just typed something into my keyboard. Okay, this is of course hypothetical, but let's just play with percentages. This is 286% buy low. Buying let's say that you buy this breakout here. All the way up here, you would have 38%. But if you bought the support here, you would instead have 83%. So 38 versus 83, simple math, big difference. So it is really worth it. The issue with buying the breakout is also that, statistically speaking, most stocks do not go on to make new all-time highs year after year. So that pool is tiny. The odds that you will be able to find it is then low. However, the overwhelming amount of stocks out there do have rallies. They go down, but they have rallies every now and then. So the pool of stocks that have rallies from lows is extremely wide and deep. So the odds then of profitably making money on bullish trades buying low is very high, vis-a-vis buying a breakout. So yeah. Okay, so we have looked at a bunch of stuff. Also thought a bit deeper also about how the market works as well. So yeah, interesting times now, but it's also a time where it's especially important, of course, to be market neutral. There's so many X factors out there, and there are big institutions with a lot of leverage, that are very active currently, and that creates a very substantial informational asymmetry.